have we got in the room? Oh, actually. Okay. All right, here we come. Here we go. So just going to let some people come in and then we'll get cracking now. Quite a lot to talk about because of the developments over the weekend. Hi, Pecky Samay, how you doing, mate? How you doing? Sammy, good to see you, Sammy. How you doing? Okay, so yeah, loads to talk about. The tariffs. Yeah, Trump's making what gets. When we look at sort of some of the aspects aside from the tariffs, so we can start with that, but we're gonna need to talk about the tariffs. Let's have a look at the news coming this week. So we'll start with the economic calendar. If I get if my internet sort of starts cutting out, let me know. I've got workmen working outside, and I think that they're affecting things. Okay, so let's start over here and see what we might have coming for the week. So we've got obviously still Chinese New Year kind of going on. Now we're going to just look at the ones that might actually drive the market. The and the reason that the Japanese news probably will is that I think the yen is a really interesting currency right now, and probably the one we should continue to focus on. And we'll discuss why later down the line. Now they are due to report a contraction in manufacturing, which is not great. We got a load of manufacturing prices coming out. So manufacturing PMIs from Switzerland, OPEC meeting. Now we need to watch out for this. We don't need to, obviously there's no numbers that are attached to this, but we do need to see what the OPEC meeting kicks out, because if that kicks out some sort of contraction in production, then that is going to drive the oil price higher, and it has already got a catalyst potentially. So we'll have a look at that. CPI from the Eurozone, that would put the euro in the crosshairs, and potentially a currency that we could trade against something else. Now, really important information from the US, the ISM manufacturing, and there'll probably be services PMI as well this week. So we got PMIs from the US, so this is a driver. So really we're looking at market moving on Monday straight away as we kind of kick off the week. The market is going to start moving. Now you have to remember that it's not just these data points, but it's also the start of the month. So banks and hedge funds will be rebalancing their books at certain points during the month, and this is a really important sort of part of the month. So there will be volatility Monday, which is great, and that's what we want to try and take advantage of. So Monday is going to be a good day to trade. Now, when we go through to Tuesday, there is nothing major on Tuesday, so the market might quieten down a bit on Tuesday. PMIs as well from the Eurozone. I don't think these are going to trump what's happened on the CPI data. So even though these might come out better than expected potentially, I mean, they're talking about growth here. Certainly in the composite PMI, which is the combination of the manufacturing and the services. The any boost in the euro on Tuesday could well be a selling opportunity. So we might be able to look for those numbers to come out positively, drive the euro higher just so we can get in short. And now that's going to be dependent on the CPI. So we can use Monday as our gauge to see where the euro is going after the CPI. If CPI comes in weaker than expected, and it's coming in like 2.6%, we could probably have a look at the, sorry, not corporate CPI. It's coming at 2.4%, in line with the previous month. We've already had a reduction in interest rates. If this starts to drop again, 2.2%, or anything less than that, there will be probably an assumption that the Eurozone will have to decrease the interest rate further, and that will drive the euro lower. So this number is going to be important. If it comes in at 2.4 or higher, that puts the euro not off the cards, but not as not as interesting a currency to trade. So we want to see this number come in weaker, and then we can use the euro on the sell side of our equation when we're sort of looking at the currency pairs. If it comes in weaker, and then we get the lower PMI, sorry, higher PMIs, that might create the selling opportunity. That's on Wednesday. Sorry, that's my mistake. I thought I said Tuesday. The employment numbers from New Zealand might be of interest. Now they are forecasting 5.1 from 4.8, so they're forecasting weakness in the labour market. Weakness in the labour market will be much more correlated to lower interest rates. So the Kiwis in a really interesting buy zone, but we do need the data to kind of like kick in and help us out with that kind of potential that we've managed to find the bottom of the Kiwi. If that does happen, there's lots of room to the upside. So the Kiwi could also be a buying opportunity, maybe even on the flip of the euro. So could be Kiwi euro long. Euro Kiwi short might be an opportunity. Average earnings from Japan, they're talking about 3.8 from 3%. So that's inflationary, and that will boost the yen. And what else do we have? ADP. So then we get on Wednesday, we get a load of important labor market data from the US. Trade balance from Canada will be watched closely. That the tariffs wouldn't have kicked in for this particular number, but if that's already starting to come below forecast, then that's going to probably spell some quite negative movements for the Canadian dollar. Then we get ISM non-manufacturing, so the services side from the US also could be a driver. And then we get interest rates from the UK. Interest rate is predicted to come down to 4.5% from 4.75%. So we may actually get a little bit of movement in the pound, but you have to remember when these numbers are forecast and they are met, it's not quite as inflammatory, so you don't really get the boost that you might assume, and that's because it might well be priced in. Traders will move before this number is released, so we might not get what we need from that. Anything else that of interest? No. So actually, yeah, non-farm payroll. So look, so big week. There's going to be a big week. That's going to put the US in focus. So the dollar's in focus, the Kiwi's in focus, the euro's in focus, and the yen is in focus, and the Canadian dollar's in focus. So actually quite a lot, and maybe the pound. So now if we have a look at the most interesting, potentially the most interesting trades off the back of the tariffs, and the most interesting currencies off the back of the tariffs, that will leave us with the Canadian dollar, big one, the euro, big one, and the yen, big one. Now we've already taken, if any of you follow the Telegram channel, we've already taken a short position in the Canadian dollar yen, and we're trailing the stops because the data doesn't suggest the yen's going to go that much further if you look at cotton seasonals, but the fundamentals or the drivers in the market suggest that it could go further now that they're in the world, then people will tend to buy the yen and the Swissy. If there is confidence, then they will tend to go towards the oh, I lost my internet. You guys still got me? Yeah. Okay, hold on. Okay. Thank you very much. Let me know if it goes, because it seems to be a bit back and forth my end. Yeah, confidence will be associated with and the Canadian dollar. Weakness will be associated with the yen and the Swissy. Now, because there is potential weakness, and particularly from Canada, now Trump's put those 25% tariffs Canada and Mexico. There is already a pattern which would suggest that we have a top in the market, and that pattern is the head and shoulders, which is here. So this has got negative connotations. There's the left shoulder, head, right shoulder. Now it needs to break the neckline to create some some genuine downside. Where that neckline is a bit tricky because of the what you're looking for is the line with the most pit perfect touches, and you can see one touch there, two, three. I don't think we're going to get three anywhere else. You know, if we change the angle of the line, I don't think we're going to get it there. There's only two touches there, two there, two there. So this is the one with the three touches. So it's got the most pit perfect touches. So we'll assume the neckline is there, and we're quite close to being on top of it. So really, because the market has come down a long way, if you're involved in this trade already, then that's brilliant. But if you're not involved in the trade, so if you're involved in the trade already because you were following the telegram, then we're trading stops. That's what we have to do here. And it's we want to keep them quite wide, particularly because of the volatility. So I wouldn't trade them. I wouldn't trade them too tightly. I wouldn't have them too tight. So trail them quite wide. And if you're not in the trade, what you're looking for is a break of this line, maybe even down right down to these lows again. Whether that comes or not is going to be tricky to know. You know, it might just go. So you might, you know, the other option is that you just trade the break. So you put a pending order just below the low of um, the December bar. Now you can see there's a horizontal level across here on the monthly. Yeah, on the monthly. So you know, and when you sort of like go down to sort of the time frames, you might find that there is more clarity on what you need to do. So we'll have a look at the lower time frames as well. But this is the obvious sort of play on the monthly, and really, you know, people are going to be looking at these trades as a longer term position. Now, the other sort of like part of the narrative with the CAD and the yen is that the Bank of Japan have actually raised interest rates. They're now at 0.75, and the Bank of Canada have lowered interest rates. So there's already a driver that would bring like closer to equilibrium what the value of that particular currency is. You know, now there is that closer gap since the inflation story where the Bank of Japan didn't move for a long time and the Bank of Canada raised interest rates. And what we basically saw was a huge trend to the upside, really sort of like during 2020, right the way up to this peak here. This is really sort of driven by the Bank of Canada's rates hikes. So now we've got rate reductions coming in, and they may have to reduce further. You know, if they've got tariffs coming on their goods, that would potentially weaken the Canadian economy, and the Bank of Canada will be under pressure more competitive on the global market. So we are looking at re-evaluating the value between the Canadian dollar and the yen, and that would probably bring it down. If you sort of like think that this was the interest rate hike run, that probably brings it down to now. Have you guys still got my screens here? I've just unplugged. Oh, thanks, Sammy. Am I back now? I should be back. Okay, now cool. Yeah, it flips between wired connection and Wi-Fi. So I've just taken the wired one off because it seems to be playing up. So I've just now Wi-Fi should be pretty good. Okay, so yeah, so that's going to reevaluate the value between the Canadian dollar and the yen purely on the interest rate balance. But you've got this extra driver because of the tariffs. Now, if we look at the trend line on the monthly, and just so you guys know, looking at these charts on the longer term time frame first is going to be really useful for everybody to kind of to utilize. It's better to look longer term first. Where's it going in the bigger picture? Because the daily chart should really be used for timing. As long as we know what direction we think it's going in, and we think we've got a narrative that supports that thesis, then we can start to look at the trades. The narrative towards the Canadian dollar yen weakness is tariffs on Canada, reduction of interest rates from the BOC, while the BOJ are raising interest rates. So we've got really a good narrative that would suggest lower. Now, if you look at this, there's another head and shoulders potentially forming here, and that would make this the neckline, and this particular neckline would be a lot more interesting because it's got a lot further to come, and it would be much more a broader sort of neckline here. And what that suggests is that price comes down here, pops up again, and potentially forms whether it breaks through, we don't know. But what we'd be looking for is this is a potential target, maybe not quite as far down as 92, but we could maybe look around about the 96, 97 area, and it's currently at 10, what's it, 106.70. So we've got as I say, a 10% reduction in the value of the currency pair, which is fantastic, and that would give us left shoulder, this whole thing here, the head that we're forming, and then right shoulder. Now, for that to happen, of course, that does need to come down first. So we've got a potentially a bigger pattern forming here. Now, if we go down the time frames, what's the weekly suggesting? At this stage, the weekly chart is suggesting that we are at near a low. So this is not an attractive place. And that's what I was saying to you. If you're in the trade already, it's great. But if you're not in the trade already, then you might be chasing this, and you might be better off just waiting a little while. So let me just see what I've got here. I'm just going to edit my trend line so we can see it. There we go. Right, so we have got this. Now, if we connect these two up, we can see prices above the trend line. So you've got the two options that you've got with this one is to trade in this area if it pops up. You're looking for a trade in that area. Now this is now we're down to the weekly. So the monthly's given us the idea that we should be looking for shorts in the CAD yen. The weekly is suggesting that we are at a low, and we haven't got the right timing for a trade short at this stage. How do the tariffs imposed by the Trudeau on the US play on this? Well, this is the thing. This is trade wars, and I'll tell you that from experience, the best things to trade during trade wars, when the trade wars are ramping up, are short equities. Now, short equities would suggest that that's risk off the market. So then you can go through and feed that through to your currencies and say, well, if the currency risk on is the Aussie, the Kiwi, and the CAD, and the currency risk off is the yen and the Swissy, that kind of suggests, oh, and the euro is also risk on. That would kind of suggest that we should be looking at shorts in the CAD yen, shorts in the Aussie yen, shorts in the Kiwi yen. So anything sort of against the yen, we should be looking at shorting. The tariffs themselves and kind of how the maths kind of works on what strengthens what weakness, what weakens, will come out in the wash. But we'll sort of understand that as time goes on. But what it will add is uncertainty. The market does not like uncertainty, so equities will tend to sell off until that kind of settlement comes in again, and they can understand the market understands. Firstly, is Trump serious? Because he threatens a lot of things. He talks a lot, but he doesn't necessarily go through with things because he's posturing to try and get a deal that we don't know what it is yet. So he's trying to get something. That's why he's putting these tariffs on. Whether he gets what he needs to get is going to be the lift of the pressure. If he gets what he needs to get, then equities will potentially rally at that point. Whether the other countries impose and impose and impose, and it just becomes a trade war like we saw last time, is questionable, which will drive equities down. Now they may not last long. Yeah, but what I'm saying, Aiden, is that Trump does it first, then Trudeau does it, Xi Jinping then does it. The Ursula von der Leyen does it. So it will just go round. It'll go round. The fact that the players that are doing it aren't the important thing, is my point. It's the fact that we have them and what that does to the market. If you're sort of thinking about finding the minutia, then it's probably not to do with currencies. You don't really need to find it to do with currencies per se. Certain currencies will benefit, but we won't know really until, I mean, the Aussie will do better than the CAD. If there's no war between, no trade war between Canada and the US. Sorry, if there's no trade war between the US and Australia, Australia would be a one that would be better. And if the trade war is ramping up because Trump's doing this, Trudeau's doing that, that means that the Canadian dollar will potentially weaken. So you could just look at the fact that, where is the conflict? Sell those currencies and buy it against the currency where there isn't a problem. Got it, cool. So now the yen is used because the yen is the best risk-off currency that there is, but because of the trade balances tend to be positive in Japan, so it tends to be a safer haven. They think of it as a safe haven, but it's the same with the Swissy. So you could be looking at the CAD yen short, or you could quite easily go, okay, you know what, CAD is just right across the board. It's going to be weak, so we can utilize the CAD. So you're looking to sell potentially here, or the other alternative is that we wait for the break of this level on the week, which will probably happen this week, probably happen straight away, because of the narrative is so fresh. Then potentially return, and then we're sort of trying to sell in the same area that we are now, but we've got the confirmation that we've broken the level, so that area then becomes of interest as a possible short zone there. So one of two areas, but you're waiting to see what the price action gives you before you get in. If you trade the break of this, then it might just go and go and go, and that'd be a great place to trade. But it might reverse, and then you have to manage it in a different way. So trading the break is not a problem, but you just need to have a strategy which allows you to trade the break rather than the retest. It's entirely up to you which one you do. Now, if we go down to the daily and just see what the daily is suggesting. So the daily is giving us. So the daily is showing right now that we're back inside the level, just. Which would suggest if this one, if now, it's an inside bar as well. You can see that the tail is just below, and the tail is below. Now the inside bar, this is a bearish inside bar. So this one actually, you could try and sell this under this point. That would be a relevant entry with a stop at the high. So you're talking about 150, 160 pips worth of stop trading below this bar, this green bar here. I don't know if you're going to get it, is the thing, because when the market opens up, this may well just gap. Now let's just see where that might go. If that was our trade and we took it there. Now the important thing really here is that we're just basically looking to short the Canadian dollar, and pick the right currency for you. But the yen, just to me, seems like one of the ones, because it's so undervalued, the yen, because of what happened with the interest rates. It's got a long way to go. The big problem with the yen, of course, is the swaps. You're gonna have to sit through some days where it doesn't go anywhere, and you're paying out. So that's the potential trade. Now that would need to come down to 160. Well, that takes you down to the lows with a 2-to-1. So it's not too bad at all, actually. It's pretty good. And of course, if you're looking at the monthly, then that particular position would take you down to here. And that would give you a, what's that, 2s, 3, 5, 6 to 1, maybe a 6 to 1 sort of position. But as I say, monthly chart is going to take a while to get down there. So you're going to have to be able to kind of handle the swaps. Let's have a look at this trend line as well and see if we're through here. Not quite. Yeah, so that's the break point. That really is the break point. We break down here. We're going down here. Would be the suggestion. That's what that would suggest. Right, now the other thing to look at is oil, because the oil market, and I was saying this to Jeff over the weekend, the oil market is in a buy area. This is another really interesting one. Now you're talking about Trudeau and Trump. The question comes in because the US, Canada exports a lot of oil to the US. You know, it's kind of their main sort of form of profit for the between the two countries. What happens to oil? And this is why I was saying you need to watch that OPEC meeting, because there may well, now we don't know what the driver is going to be to start with. Will that reduce the price of oil? You know, does it bring it down? Or do the tariffs actually cause a supply issue? Demand will be the same. Does it cause a supply issue because Trudeau comes out and says, well, you know, or whoever's eventually in charge comes out and says, well, I'll tell you what, forget it. We are not going to give you the oil you need, or whatever, or we're going to add tariffs in this way, and that's going to affect the price of oil. We don't know. But my suspicion is it's more likely to have a bullish effect on oil than a negative one. Because if the producers can't sell into the US at a decent profit, what are they going to do? They're either going to look for markets elsewhere where there isn't a demand, or they're going to say, cut down production. We can't sell, cut down production, layoffs. We're going to start, you know, getting rid of people because there isn't the demand for our oil, and we can't afford to have our plant open with this many people. Then you see layoffs, and this is why tariff and trade wars are so damaging for nations. So we then might see, and again that would feed through back into the Canadian, the Bank of Canada having to lower interest rates to boost the economy again. So that really drives the narrative for lower Canadian dollar. But it might drive oil higher. We need to watch the price action with this one. And my suspicion is it will, because oil is in a buy zone. Now, if we look at it, this is what we've got. So we've got a horizontal level here. Horizontal level across here, and we are holding that particular level so far. Okay, this is the monthly. So, but you know, but same technique. We're looking at the longer term time frames first. Same technique. There is this level here at 68, and that has been in existence since 2021, and it's had plenty of opportunities to try and get through this, and it hasn't worked. We've rejected the top trend line. Now we're going to go down to the weekly chart. The weekly chart is suggesting a higher high. Okay, now you know where we draw this from is a little bit questionable, but I would say that this is a high. This was a downtrend. Here's a high here, and this is an equal low. So there's a low and there's a low. So there was already sort of some evidence that this area was holding, because the low wasn't a lower low, but that is a lower high from that point. Now we've got a higher high. So there's your higher high. Now in this area, look at this bar. That is looking like a low test bar of this point here, of the breakout. So now we've got a higher low. So on the weekly chart, this is suggesting that we're going to try and get back to this level again. Now, whether we get through, that's going to be dependent on how the market perceives what the tariffs are going to do to oil, and it will depend on what OPEC say. If OPEC say, right, we're cutting production, you know, there's going to be a lack of oil, that will drive this back up again. And this is complex, because the driving back oil again, That's going to push prices back up again, and that means that central banks will be in a position where their economy is weakening and will want to lower interest rates, but inflation is peaking, and they'll need to potentially raise interest rates. So this is going to be a tough period, but that does mean equities are going to be under pressure, and potentially that again could come back to the yen. So we're sort of like looking at yen having strength because of the uncertainty. So there's lots of, this is what I was saying about risk on, risk off. When you have these uncertain aspects coming in where labor markets could get negatively affected, but inflation might pick up, that makes the people go, what do I do? And when they say, what do I do? The first thing they do is sell anything where they are overexposed. And we'll look at equities as well in a moment. So that's what we got. So we got this going up. So that's going to suggest it's going to tag that level. Now that would also, if you look at the measured move on the bar, there's the range of the bar there. And where that brings us up to is beyond the level, sort of back to these highs here. So we're aiming at around about 78 from 73. So we're talking about a 9, you know, 8 or 9% gain in this thing here. So the you know, looking at where to get in, top of that bar would be, you know, that the obvious kind of break point, that's at 75. Now let's have a look at the daily. Lovely bar on the final day of the week. That's a decent buying bar. The low is below all of these lows, so it's tested the lows. This is a classic hammer, and the hammer is named because it tends to hammer where the low is. The hammer has to be the low for it to be a hammer, and we've got that here. That's the lowest part of this area here. So we got a low there on the hammer, and we've got this trend line here. So let's try to get through that trend line, hammered out a low, ended up right on the high. So that's a really good looking bar on Friday. So if this can break through these highs here, now it's at the minute we're still in a downtrend on the daily. So you're waiting for this to turn into an uptrend. There's no reason for us to get in early here. What we want to do is wait for this to confirm that it's in the uptrend. Now the uptrend could be the high here, could be there, but if you're bullish on this, then you'll take the lower version. So if it breaks through 74 and comes back and creates a higher low, this is going to be of interest. But this area here at 75 is the weekly bar. So at any point here, you want to be, you know, not you want to be in, but that would be a decent point to try and get in, with the stops maybe down there. So you're looking at 35. And that would take you back to the highs to get a 1-to-1 and then potentially beyond if the narrative compounds. Right, so let's have a quick look at equities. NASDAQ, perfect. Trade war, narratives coming out, suggest sell the NASDAQ. Look at that, lovely bar. We've had a gap down. Gap's now been closed. And there's a decent looking bar from Friday. Now, if we look at this again on the monthly, this is December's bar here, already showing that there was stress. We've had a run in the NASDAQ, really from these lows. This was the last time we had a downtrend. So we've had a run from around about 10 to 20, so it's doubled in value. So that is basically saying we are overvalued. We are at or near a potential peak. Potential, you never know, but there's a potential peak there. There's an obvious sort of area for it to come down and test, and that's going to take us down to around about 19,500 from 21,500. So potentially a 2,000 drop in the Nasdaq. So potentially a 10% drop in the Nasdaq, possibly. We got evidence from last month's bar. Sorry, the December bar. On the weekly, it's still in an uptrend and it's managed to hold. But there was this gap down. But you can see there's stress up here. When you look at these bars, there's a few more red bars than we've had. We've got a lower high, but not a lower low. I mean, I suppose you could argue this is the horizontal line, lower low. Not really, not really. Not a decent lower low, but we do have a lower high. Whether that plays out and breaks down the bottom and confirms the lower high, difficult to know right now, but it looks like it's in play. So there is stress on the charts. The charts are telling us so far, look for long in oil, look for short in NASDAQ, look for short in the Canadian, well, the Canadian dollar we'd have to wait for, so we need information on that one. But certainly long NASDAQ, sorry, long oil and short NASDAQ looks to be what the chart is telling us. And even though we don't know what the tariff, what traders will do with the tariffs, the tariffs do suggest there's going to be uncertainty, and that would put pressure on equities. Historically, that's what it does. So this is a long tail here. It's not a hammer because it's not hit the low. This is a hanging man. Now the hanging man is like that also has negative connotations. Now we go down to the daily. We've got evidence here that that level has been rejected. Now the level's obviously a little bit lower. It's obviously that one there. There are our touches there. That level's been rejected. That's only 400 pips. Now for 400 pips, and we're looking at potentially 2000. Is that right? Yeah. So there's a potential 4-to-1 move here. If you were to trade just on this bar, you know, if you're looking at intraday charts, it'd be different. But that's what that would suggest. Do we have a lower high? Possibly, but that's going to be confirmed if we break through these lows. But we want to be in before that, really. So looking at what happens on Monday is going to be important. Now, a little gauge that we can always use is what's gone on the weekend with risk, and the only thing that's open on the weekend that tells us about risk is the cryptocurrency market. Now, if we look at the cryptocurrency market, since that announcement came out, yeah, it's down. You got it exactly. There is pressure here. It's not breaking through the lows, to be fair. So you know, there's not absolute all-out panic, but the cryptocurrency market is under pressure, and it's showing us that over the weekend it hasn't liked that news. This looks like it is now. If this breaks this one down here, if it starts to close here, we got a lower low. Oh, WTI, Eunice. Now I think it's called XTI on XTI on JDR. Just confirm that for me. But I think it's called XTI. Have a look, Eunice, and see if you can find it, and let me know. So this is suggesting that that the market hasn't liked XTI. Fantastic, thank you, Sammy. Fantastic stuff. Okay, so we got a potential lower low here forming on the daily on the Bitcoin chart. It needs to break down here really, and then we've got this possibility of a little bit of information that suggests that there is certainly some uncertainty, just a little bit of weakness coming into the market. It would have to break down here to kind of really be confirmed, and that may not happen until next week because that's when liquidity will really come back into the market. But over the weekend, this is suggesting there's been some concern. Yes, XTI USD, you got it. Yeah, that should be the same. So have a look, Eunice, and let me know what the price is. What's the price of that? It should be around about the 73, between 73 and 75 mark. It might be slightly differently priced, but it should be 73, between 73 and 75. And if that's the case, then you've got the right one. Right, so that's what the crypto market is telling us, that there's a bit of risk off over the weekend. Cool, 74.3. Yeah, perfect. 73, 75. Yeah, that's the one. There should be a dot there, though. It should be 74.393. Because oil's at 74 bucks per barrel. That's what that's telling you. Now the final one we'll check is gold. And gold is it's a tricky one, gold, because I have to say I'm looking for shorts in gold. decent looking bar on the dailies, but let's have a look on the monthly. Another a chart which is getting to the point where it's overbought. Now, the overbought can remain overbought, and it can get it can get embedded and go further and further and further. It looks really positive, long way to the upside. The only sort of hint that we had some negativity over the last few months is December and November. And January has ended up very positive. You know, it hasn't broken those highs with any real gusto and any real confidence. So that may be one slight negative. But the weekly looks like it is, yeah, it's slightly pushed to the upside. No sell signal on gold, and of course, anybody that's trying to protect their account and protect their money may well go into gold. You know, because what happens is you have to think if people are selling equities, they could number one sit on cash or number two buy something else. Now, if you think about buying something else, gold is an obvious thing to buy when there is uncertainty, but the price is so elevated, it may not be attractive. So I'm looking for sell signals with gold, but they're not really coming. All we've got right now is a strong uptrend and one bar, which suggests we could be hitting a high. That's all we got. We haven't got a lower low, we haven't got a lower high, nothing like that going on. So I'm watching the gold market closely. I'm not interested in buying because I think it's a bit elevated. The problem is the narrative suggests buying, and the charts are suggesting we probably still stick with the trend. So there's longer to go potentially, but I'm looking for some downside with gold. Really, with gold, we probably want to see this going up to add to the overall mood and sentiment that we're going to get weakness in risk on assets. I mean, not exactly, but close. It's close. It's close, Sammy. Yeah, but not exactly. The thing is, and the dollar. The thing is, if the dollar strengthens, then everything else does weaken. But well, to a degree. But you know, the way that to view gold is similar to any other currency. The dollar may well be strengthening, but there might be just one other currency which is outstripping it, like the yen. So what you might see is dollar up against everything but the yen. And it might be the same with gold. So you see the dollar up against everything except for gold, or you'll see the dollar up against everything and gold not quite as negatively affected. So everything's correlated, but to a lesser or greater degree. It doesn't mean that everything's going to be affected equally. Things are going to be affected in a different manner. Does this boost the dollar? Maybe, and you know, I'm not sure. Trump has got this difficult thing going on because he's trying to create a situation where the dollar is king. But he also needs to lower the price of goods, which is why he puts tariffs on. What he's trying to say is buy from us. Your stuff's expensive. You know, where if America, the American market is buying Canadian goods and services, if he adds tariffs, it makes them more expensive and makes the US goods and services cheaper by default, not because he's lowering their prices, but because he's raised the price of other things. So people buy American, boosting the economy. That's what he's up to. And he wants to negotiate really with Canada to try and get sort of better deals. So that's where we are. So you know, just to kind of like do a final run. You guys have got any questions about anything else? Let me know. But to do a final run, I think this week we are potentially looking at risk off. The euro could be affected. Let's have a quick look at the euro yen because the euro's got that CPI data and that could be a driver, an extra driver. Euro yen looks quite similar to what we've seen with the Canadian dollar. Look at that. Same head and shoulders pattern. So we can see right across the board, the yen is starting to show some signs of strength. So it's just picking the right currency against it. The euro is better in a way than the Canadian dollar for value because you won't pay the swaps. But is the narrative quite as good with the tariffs? Well, it might get there if Trump slaps tariffs on the eurozone, and he is talking about it. So we've got head and shoulders pattern here as well. I'll draw it in for you so you can see it nice and clearly, just in case you're not yet recognizing it. Left shoulder, this is the monthly chart. Head, right shoulder there. This is a negative connotations on this pattern. Maybe got a slightly clearer neckline. Let's have a look. That's probably the neckline, but that one's so close down there. You're looking at that point there. So this one's got a chance to get down to 155.90, 156 from 160.75. So this has got a long way to go as well. You know, potentially 500 pips to the downside on the euro yen. So that was also well worth looking at. We'll look at it quickly on the weekly. The weekly's nearer. It's not too bad. A little bit close to that low. This is the problem. Now this one is already actually at a sell zone. Look at that. That's created the break and the retest. So this one's ready to sell on Monday. That one's ready to sell from the point from market. You know, where you're going to put your stops is maybe above this bar, or if you're a little bit more conservative, you could pick a high point that you don't think it's going to be coming back to, and then maybe add in. So how you manage the money is going to be, you know, another kind of layer, but this one's already broken through. This would suggest to me that if you know, if you were to put stops at the highs here and create a 90 pip trade, if it closed back inside the level before it hit your stop, you'd probably want to just manage it. If it starts to close above there, you'd probably want to take the trade off and wait for further confirmation. Then you're only risking maybe 3/4 of the amount, or maybe even half if you trade it well. So you'd want to close. It'd have to close above there. Getting in there is not a problem, but if it closes above the line again, maybe the trade comes off. But you could pick a slightly more conservative level by just running a little trend line here and just coming above this point here. You know, so you could stretch that out a bit, but the euro is going to be interesting to look at. Might not move until the CPI data, but that's ready. That's ready to go on Monday. Okay, so that is that's the weekly analysis, guys. Yeah, as I say, the final reiteration is I'll be looking at long WTI, and I'll let the market and the charts tell me whether it's right, whether my analysis is right on the tariffs. I'll be looking at short the CAD yen. I'll be looking at short the euro yen. Gold is on the watch list, but it's not really a consideration right now. I think my favorite, if I'm honest, would be short the Nasdaq. Looking at short equities. So I'll look at all of them and see what is shaping up early doors. But that's the general mood in the market. To me, looks like it's going to hit a point of uncertainty and a point of taking risk off the table, and that will drive me towards certain decisions in the market as well. Unfortunately, the Kiwi tends to be strong seasonally at this time of year with a Swissy week, but I don't know whether that's going to play out as confidently this time round because of what's just happened over the weekend. Big problem really for risk on currencies potentially. All right, have a great week, guys, and I will see you very, very soon. Trade well and make sure that your money management is tight. If you keep it tight,